Gold is off last week's highs, but one trader says we should expect muted action until that Jackson Hole central bank meeting later this week. For a look at what's in store this week in commodities, Scott Bauer, CEO of Prosper Trading Academy. Scott, how are you trading gold right now?
Again, I'm actually staying away here until we get, first off, the Fed minutes, which are going to come out Wednesday, and then, a little bit of sense of what's coming out of Jackson Hole, which those meetings begin on Thursday. So I think it's going to be pretty range-bound this week, barring any unforeseen humongous move in the marketplace. And, the reason it's coming off a little bit today is because we see a nice rally in the equity space.
What about oil? What's your feeling there? Oil around $55 today. Does it have a shot at getting back to 60?
I don't think so in the near term, Andrew, unless there is some big geopolitical event. The overriding theme is still the U.S.-China tariffs as well as global demand. And you look at the production numbers or the reserve numbers, and for the last few weeks, there's been expectations of drawdowns. We've actually seen builds. U.S. shale, we're producing more and more. And obviously the health of the global economy, which at this point is not real good, and maybe we'll get to see a little bit of light shed on that at the Jackson Hole meetings later in the week.
A big determinant, obviously, the U.S. dollar for commodities generally. When it's strong, that puts pressure on nominal commodity prices.
Sure does.
Do you have a feeling on the U.S. currency?
Yeah, I think it's pretty stable right now. I actually would not be inclined to say that it's going down. I think we're actually going to push a little bit higher from here, perhaps 99 and change. But let's see what happens. Again, it's so dependent, and it's such a fluid environment, so dependent on what we see happening with the U.S. and China. And again, I hate to just beat a dead horse here, Andrew, but what we see, the rhetoric coming out of Jackson Hole later in the week.
You think that, just back to oil for a sec, I forgot to ask you about this. You touched on it already. But do you think we are looking globally at a build-up in oil stockpiles?
100%. And in the rise of oil today, two things. A, there's no worse news of tariff talk, but then there was also another drone shot down. Mm-hmm. So, that obviously those geopolitical risks, when we see something like that, props up the price. But again, the global environment, the builds, the slowdown in demand that is expected here, I think there are so many headwinds coming at oil. I really see us sub 50 sooner rather than later.
Whoa, sub 50 on WTI.
Yep. Yes, on WTI.
My goodness, yeah, because obviously there's a lot of oil sellers out there who want to market their oil. OPEC, I think it's Bernstein said, OPEC, you're going to have to cut by another 500,000 or 1 million barrels of oil a day.
No doubt about it, and I don't think they're going to do that. At least the rhetoric that we've seen out of Saudi recently, it doesn't look like they're going to do that. Another thing to consider is we're coming to the end of the driving season pretty soon here. Mm-hmm. This has been the peak driving season for the last 3 months, and we have not been able to really see oil break out of any sort of range to the upside here. So again, that's another part of one of those headwinds that I think that oil really has coming at it. Gasoline
in the States, obviously, you touched on driving season. Presumably, Mr. Trump will be happy to see lower gasoline prices.
He absolutely would be, and unfortunately, a tweet can change the complexity of the marketplace, as we know, and that ranges from rates to gas prices to the equity market. So he would love to see it lower. He would love to see oil sub 50. That is not in any way, shape, or form why I believe that oil is going sub 50, but yes, he'd be all over that.
Well, tell us, we're just curious. You've been around the trading pits for a while. These days, in this odd era of negative interest rates, for example, has that changed lives for you in commodity trading?
Not at all. In fact, I would tell you the opposite. Well, the only way it's affected it really, Andrew, for traders down here in commodity trading is the added volatility that we've seen over the last 3-6 months or so, which has been a fantastic environment for traders. Obviously, the retail, investor, retail trader doesn't like the volatility as much. But for the guys down here in the pits, it's been a better than expected summer and much rosier than many people would have expected.
Always great to talk to you, Scott. Thanks very much indeed.
You as well, Andrew.
Scott Bauer, CEO of Prosper Trading Academy.